All right, you're welcome back. We are back like we never left.
Yes,
How
it
are you
is.
doing, everyone? It's
Blessed
so
and
good
highly
to be
favored.
back. Excellent. It's
Yeah.
really, really, really great to be back. And this is a very special episode because for some reason, universe aligned every single one of us here to be at the same spot, right? Pretty much in the East Coast at this time. This is excellent. I am very, very excited about it. And we bring you all greetings. We are very excited for what we do. And for those who are probably coming across this podcast for the very first time, my name is Madupe. And here is the Wealth Bridge podcast. I don't get to do it alone. Neither of us get to do it alone. And on this special episode, I have my beautiful, amiable persons in attendance. Demola and Debola, how are you doing, lady and gentlemen?
It's great to be back, and I hope you're enjoying the East Coast, Mudupe. It's good to
We're
have you.
taking notes. We're taking notes. I'll let you guys know at the end of my visit if I did enjoy it or not.
Okay.
Well, it's good to be. It's definitely great to be here. I mean, it's always fun doing this with you ladies, and bringing value to our audience is one thing I look forward to, every time. So, we are at it again, and I know that all our viewers tuned in today, you definitely wouldn't regret it. This is going to be another awesome episode at the Well Bridge.
Yeah, you know how they say as it hot, right? That's what we're
Yes.
bringing here. Thank you. Thank you, both of you. And in one of our last episode now, you probably would remember, for those who have been following us and you probably haven't, please go back there and check. That's the topic: taxes, punishment or incentive, understanding the system before it costs you. So in part one, we talked quite a bit. The co-hosts, Demola and Debola, sliced and diced this. They pureed it. They did everything to all that topic, right? So we talked about the mindset shift. We discussed how or why many people see taxes as punishment, how taxes can also be informational, and how the tax system often rewards certain behaviors like saving, giving, building, and planning. So today we are moving into the second part of it, which is the conclusive part of this conversation. Now we want to go deeper. Do we have your permission to go deeper? Yes, we are. Now, if taxes can be incentive, how do we actually use that knowledge? That's what you're going to be hearing from my co-host today. Now, how can business owners, employees, that's you and I, that's business owners, you and I, investors, families, your family, my family, people planning to retire, right? Or people who are probably just already there, become more intentional? And how can we stop seeing taxes as a fearful topic and start using taxes as more of an awareness and part of wealth strategy? And so, in no particular order, I'm going to have Demola, start us with this conversation. Let's begin with the business ownership part. And I know you love that, right? You love being a business owner. You love being an entrepreneur. Many people hear that business owners have more tax planning opportunities than employees. Is that the truth? Are they just essays? But how can business ownership change the way people experience taxes?
Wow. I mean, it's interesting. And I remember just a few years ago, and how Uncle Sam, as we know him, you know, I used to give so much money back to Uncle Sam until, we switched from the left quadrant to the right quadrant, the quadrant of employee to the quadrant of employer. And business ownership is something that a lot of times, we are kind of like fearful about it because we've not experienced it, or we don't have too many faces that we see thriving in business. And especially, this podcast with more tailored to people in the diaspora. So we want to let you understand that business ownership is not something to be afraid of.
Mm-mm.
Business ownership is actually that one of the biggest ways you can actually enjoy most of all the tax incentive that this nation provides. And that's one of the areas that I want us to look at it. As an employee, most of all your income is coming from just your own personal effort. But once you switch to the business ownership, whereby now you can leverage, and that's what business ownership is really all about. It's all about leveraging. So the leverage that it gives you, it expands not just in just your income alone, but some of the deductions that it allows you to be able to do. And when we talk about that, we're looking about, think about structure. You have to look at how it's structured. We must understand, as a business owner, you're understanding revenue, expenses, profit, taxes, record keeping, and all that. So the tax system generally allows, especially, this is very, very key, legitimate business expense.
Mm.
Not all expense is something that you can deduct or you can take advantage of. That's one of the things. So don't just go say, oh, because I'm a business owner, and you don't have it properly structured, that can actually hurt you. So that's why this is very, very important that you structure it properly. As long as you structure it properly, there are certain deductions which you're allowed to benefit from. And that's one of the things that is really, really great about business ownership. So if you spend money for ordinary and necessary business purchases, the system treats that different from a personal spending. And that's why you have to shift from that business. And we're not even saying that, if you have a job, then you have to quit your job to start your own business. No, you can have both simultaneously. The advantage is just that now you start to enjoy more of the tax breaks that you wouldn't have as a personal employee. But as a business owner, you have to understand, once you structure things legitimately, you structure your business properly, there are legitimate things that you could definitely enjoy. So when done correctly, business ownership can help you build, income structure. But when you do it carelessly, it can create a tax problem as well. So the incentive comes with a huge responsibility.
Mm.
The person who's actually setting it up. So that's I'll leave it at that.
Excellent. I love that. I love that you left them with that particular liner. It comes with a lot of responsibility. Demola emphasized over and over again, not all expenses are business expenses. But as long as it is reasonable, as long as it is necessary, right? According to the publication of the Internal Revenue Service, then you can, bring this on reasonable, necessary, in line with your business, right? Then you can bring it on and say and call that, legit, as long as you also have proper record keeping for search. Now, that balance is very important, Demola, and I thank you for bringing that out. Business ownership can create an opportunity, is just what you heard him say, but not only when it is handled, right, with structure and integrity. I believe in one of our episodes here, we talked about integrity. Integrity being what? You doing the right thing when nobody even sees you. You
Yeah.
see? Now, let's talk about retirement planning. And I'm going to have Debola do that because, hey, I know Debola has been, very busy these days. I mean, working with all these retirees, working with individuals, 5 years into retirement, she's been working, planning, their retirement and showing them what bucket to put their money. Hey, I hail you, mama, because this is one of the clearest examples of taxes being used as incentive. Let's hear from her what she does with all of our clients in this space. Joe's getting ready to retire in the next 10 years, in the next 5 years. What has she been doing? Debola, how does retirement planning help us see taxes now as an incentive rather than just a burden? And please, share with us, how you help, these individuals and they keep smiling, right? And referring others to you. Share with this audience because they want to hear, they want to know. When we know better, we start doing better. Back to you, Mama. Go for it.
All right, let's get into it. How does retirement planning help us see taxes as as a benefit and not a punishment, not a burden? So I mean, retirement planning is it's something that is very important. We've talked about it many times,
Mhm.
and I want to believe everybody understands that. Everybody wants something to retire to. You don't want at the end of the day that you stop working and you don't have anything to actually fall back to.
I hope
So
so.
it is very important. And retirement planning is a major example in this case because the system wants people to prepare for the future.
Mm.
It's not just you wanting to, the system also wants you to prepare for the future. They don't want it to become their responsibility
Burden.
at the end of the day, right? So when individuals save for retirement, what does that mean? They reduce the likelihood of becoming financially vulnerable later on in life.
Mhm.
So you don't become a burden to maybe your children or the government, the system, most especially. You don't become a burden to Uncle Sam. As much as you give, Uncle Sam does he want you to come back, you know. So that is why retirement is one important thing that even the system encourages. And that is why certain retirement accounts come with tax advantages, which makes it an incentive. Depending on the account type that you have, you may receive tax benefits, tax breaks, tax deferred growth, or even tax advantages later. We're talking about tax free, like being able to get your retirement benefits without having to pay taxes on them later on. I believe everybody wants that. Really, that is something that is very possible. It is available, and it is one of the things that we do. One of the plans that we put in place for families, individuals, to help them prepare for that time. And this is where planning matters because people need to understand the differences between tax deferred, taxable, and potentially tax advantage income sources. Tax deferred is, as you know, like in the retirement accounts that we have through our employers and all that, you are deferring in taxes till later on. So the money you're saving for retirement now, you're not paying taxes on them, but you surely will pay tax on them later on, and more than what you have even saved. All right, taxable maybe the income that you earn that needs to be taxed, and there is also, I mean, sorry, the benefit that you're getting from your retirement that's going to be taxed later on. That means your retirement account may not be taxed now, but they may become taxable later on. And those ones that are tax advantage income sources, those are the ones that you don't end up paying taxes at all later when you start to get your distribution. Let me put it that way. So these are different ones, and it depends on individual goals. It depends on what you want, and all these are sort of an incentive in their own way. Like I said, it depends on what you want, but we do look at individuals, what their goals are, and we help them to strategize and put a plan in place that actually fits what they want. So retirement planning is not just about saving money; it's also about asking, where will this money be taxed? When will it be taxed? How will withdrawals affect me later on? That is very important. We talk about build, protect, preserve, and be able to transfer later on. What will my income look like in retirement? Is three
Mm.
quarter of it going to taxes, or am I just enjoying what I have saved? And how do I avoid creating unnecessary tax pressure in the future? These are
Mm.
important questions that need to be answered. And we are here to help you. This is what we do. And every day, like Modipe, we always say, every single day and twice on the
On the weekend.
weekend. So we are still doing that. Just give us a call and we'll be ready. We'll be happy, glad to help you put the
I
right
love
plan
that.
in place. All right, Modipe.
Thank you so much, David. I
I
know one of
almost
the
didn't want to
things.
stop, okay?
No, you're good. You actually nailed it. I love it. I'm like, let's go. Let's give this on. In fact, if we take a little bit of time today, I probably would say yes because I would like for us to really go down in here. Debola was touching some nerves, people. It's not about how much you have or how much you've built over time. The conversation is how much are you going to keep at the end of the day,
Yeah.
right? And these are some of the things, right? We're constantly teaching people, working our clients will, customizing them on. Don't wait until you are 67 at 70 and then you want to have this conversation.
Mm.
Start having it now until you're still in your 40s. You don't to have started that conversation. You know what? You can still have the conversation right now. Schedule a time. If any one of you are listening to us right now and you're like, oh, I know Debola, oh, I know Demola, I know Modupe, please reach out to us. We will sit down with you and have a conversation with you. Okay. Now, that conversation will lead you at least to the next step that you need to be taking, right? And that is a very, very, key point that she raised. Retirement is not just an age, it is a tax season of life,
Yes.
which means that sometimes if you think, oh, you probably have been deferring these taxes, uncle, auntie, if there is no free lunch in Freetown, those that you know, okay? The decisions we make during our working years can shape how much control we have later.
Mm.
And I am so sick and tired of seeing my client in their 67 and 70 having to pay five figures in taxes. Did you hear me? When I say five figures, I'm talking every 15,000
Mm.
back in taxes. Because right now, what's going on? Their majority of source of income is coming from a tax deferred bucket. They didn't know about it. Those of us in our 30s and 40s now, don't wait until then. Start asking conversation. Sit down with a licensed financial professional, those who know what they are doing. The three of us here, we know what we're doing. If you feel you think you want to meet with us, please be our guest. And that takes me to our next question, and I would like for Demola to please answer that. When people invest or build wealth, Demola, they
Mm.
often focus on the return. What is my ROI? What is my ROI? I keep hearing that. But how can tax awareness help investors make better decisions? Go for it.
Awesome. I guess you've already started. You give us a little hint on this.
Okay.
It's very important that we must understand as investors or people who are trying to build wealth. One of the tax awareness that we need to understand is it doesn't really matter how much we make,
Mm,
but how much we keep after taxes. And that's very, very important because a lot of times we're just thinking about, what's in it for me.
mm,
But also, are you looking at the tax implication of what's in it for you?
mm,
Because if you could do a deal or you could do a certain type of investment that you would have to pay more taxes. If you have to pay more taxes, it means you're keeping less, even though you made more.
mm,
So you have to think about the tax implication on that type of income. So we already know that different types of income. If you're here, we're addressing this to most of our diasporans in North America. There are different types of, income, which could be taxed differently based on how you made that money. You could have, rental income, business income, investment income, even just capital gains. All these types of incomes are all treated differently when it comes to taxation. So if you sell, for example, if you sell an asset now, you need to understand that, the possible tax consequences before selling that asset, not after. I remember just a few weeks ago, guess I was sharing this with Modupe, and a lot of retirees who've paid off their house, and all of a sudden they want to move from maybe a bigger home to a smaller home because now they're trying to downsize, but they don't always think about the tax implication even at that age. So you have to sit down with a tax preparer to actually look at all these things before you start selling assets or before you start taking income from that asset. How would it affect you? So we have to understand that this is one of the reasons why tax planning should be part of your investment planning, your investment strategy. Taxes, they often say there's one thing you can't avoid in this
mm.
country.
True, true. Mm,
Taxes. you
mm,
know, but there are ways whereby you can avoid taxes, not evade taxes. And that's the
Bracket.
difference.
Mm-hmm.
That's the difference. So, what are those tax strategies that you know? And we can definitely help you, in that area. So, sometimes the timing even of the sale matters. You might be selling an asset at the wrong time. So, sometimes the type of account use matters. Sometimes holding periods matter. Sometimes losses may have planning value. Sometimes income from investment can even affect other areas of your personal financial life. So
Mm,
all these things, there has to be holistic. There
mm,
has to be a type of plan. It's not just about, you know, Uncle John told me to just buy into this, or Uncle Rufai told me to do to sell this asset. You have to sit down with somebody and
mm,
look at some of the ramifications that these things might bring. So
mm.
please, it is very, very important that we need to be aware of how taxes can either erode, our investment, or actually it could be a good benefit to our investments. That's it.
That's powerful, brother. Thank you so much. I told you, you guys, you don't know these people. I am so honored, right, to be working with these powerful individuals. They are doing excellent. I'm sure your clients are very proud of you. Oh my God. Oh my God. If you are their client, if you are any one of us client, you better be sending us referrals because trust me, one of the things we've been out to do is we want to have an impact in the lives of those people we meet. And we're constantly doing this with a whole lot of joy. Jesus' joy filling our heart, and that's what and all we're doing. Well, building is not just about movement, people. It's about the wise movement. It's not about, okay, everybody is moving, let's go do it. Everybody's doing this, let's go do it. But a good financial decision should also consider the tax impact, just like he had said. So let's take a little, detail and talk about estate planning and legacy vis-a-vis taxes.
Mhm.
And I know Debola is going to help us with that. When people hear estate planning, Debola, as an estate planning strategist that you have, they often think about just wills and trust. But how does tax awareness connect to estate planning as well as the wealth transfer?
All right. Thanks, Modipe. How tax awareness connects to estate planning, and then we talk about how it relates to wealth transfer. You I know we've talked about estate planning before on the wealth bridge, and we're still going to talk about it more because we need it. And estate planning is about making sure what you worked for is transferred with clarity, with
Mm,
structure, and as little confusion as possible, so that there won't be any chaos later on, there won't be any conflict and all that.
mm,
So taxes may be part of that conversation, depending on the size and the type of assets. But even when taxes are not the biggest issue, you know, poor planning can still create costs,
mm,
delays, and family conflicts. If your estate is not well planned, uh, things are not well put in place, or maybe you even have created like a trust and you don't even have anything in it.
mm,
Nothing was, that's one of the mistakes that people also make. And you don't have anything there, it's just an empty trust.
mm,
Things like this later on brings about conflicts within the family. So people need to understand beneficiaries, accounts, titles, trusts, life insurance, retirement accounts. These are some of the what they call it. I'm trying to find that word. The things that you load into the asset that you load into your estate planning
You're talking about funding it?
portfolio. Yeah.
Mhm, mhm,
So your real estate and how asset passes to the next generation. All these things has to be all together in the plan. And there has to be a way that it can be communicated, it can be transferred to the next generation. So legacy is not just about leaving money.
mm, mm,
It is about living order,
mm,
putting things in place. If families do not plan, you know, the wealth that you're living can become lost or can even become problem to the family. You
Mm,
can use that wealth through probate. We've been talking about probate. You know how costly probate is. You
mm,
don't want even any of your stuff, any of your assets to go through probate. Unnecessary delays, disputes, and then we talk about poor tax decisions. Also, we can also say lack of clear instructions. So make sure that things are in order. You put them in order now. Don't wait until the last minute where, oh, okay, maybe something is, and okay, let's put, and things are not done properly. Seek the advice of, estate planning strategists like us, you know, and then we'll be able to guide you into what to do, how to get started, where to go, who to see, what is needed, and all that. Okay. What happens to your business? What happens to your children? What happens when you are gone? All
mm,
these things are things that needs to be taken care of now. You have to know. You have to put them down. People, somebody needs to know that we call them trustees. Somebody who is going to be able to take care of those things after you are gone. So tax awareness help families think beyond today. It helps you to think about all those things. It helps you to think about what's going to happen to your family and the likes. So do not just estate planning, like we have said before, and we continue to say, is very important, especially in within the immigrant community. And we're going to be coming back to actually talk about to dive deeper into it. Today we're talking about tax uh, awareness and tax advantage when it comes to estate planning. But that's one topic that is very important, and we'll continue to talk about it. Thank you. I'm going to stop there.
thank you. That is very, very important. Just like Debola said, legacy without you putting structure in place is you're literally building confusion. You're literally calling yourself and saying, "Hey, myself, come together. Let us come and build crisis." I don't think anybody wants to do that. So when we talk about taxes as an incentive, we're talking about planning before the crisis, right? Debola emphasized that over and over again. And I've seen quite a few things. They've all seen. We're not just talking, we're talking from a place of experience. Having worked with individuals in the community, outside of the community, and seeing how many of our colleagues in this space, right, we're thriving and we're saying that certain things ought not to have happened, has no business happening if certain things have been put in place. Okay. And I know that we're at times quite, fast spent right now, but we probably won't do justice if we don't close this out with practical action steps. And I'm going to have Demola, help with this part of this conversation, right? For any listener out there, probably listening to us right now, or who's going to catch up on the replay, who now wants to stop, being so scared of taxes and start using tax knowledge as an advantage. Start using the tax knowledge as, okay, let me use this as my tool, one of the tools I have in my toolbox, right? What practical steps should he or she take, sir? They would like to hear from you.
Awesome. One of the first step I would say is definitely get educated, and that's the one of the biggest challenges that we often face in our communities. We
Mm,
have a lot of all these fancy degrees, which nothing is wrong with it, but when it comes to the area of financial literacy, we're very illiterate in that area.
mm,
So that would be one of the very first thing is don't worry about the PhD. We know you got your PhD, we know you got your doctorate, but that has nothing to do with your taxes. So get educated first. And you don't need to be a tax preparer. You don't need to be a tax expert, before you need to start putting these things in place. But you
mm,
should understand the basics of your own situation. A lot of people have all these different types of assets that they don't even understand how those assets are being taxed. People are making income in different ways, and they don't even understand the ramifications of the implications of taxes on how those that income is coming in. So
mm,
these things, the education is so important. Understand your deductions, your credit, your retirement options,
mm,
major financial obligations that are coming. The second thing is you want to become very organized. Record keeping cannot be
mm,
overemphasized when it
mm,
comes to the area of winning in a tax game. You know, everything you're doing, your expenses, how do you track it? Do not commingle. You know, we talk about
Mm,
mingling, you know, your personal expenses with your business expenses, and they're all coming from the same coming from the same purse. You don't
mhm,
want that. You want to have everything all structured properly, whereby there's a separation. We can see all your expenses coming from a specific account, or specific accounts that are labeled for that business entity. you know your investment documents, you have them. Do you have everything? Are you tracking your income, contributions, all these things? Then the last thing I want to leave with us is, we should review our situation before any major financial decisions we make. This is one of the things. We make certain financial decisions, then the tax implication comes.
mhm.
Some people, they don't understand how their retirement portfolio works. They take out money from a certain tax deferred portfolio and trigger taxes they're not supposed to trigger, because
mhm,
they never sat down with somebody to educate them first. So
mm.
it's very important, before you sell an asset, withdraw retirement funds, start a business, change jobs, or any major financial move. Ask questions, and don't just ask questions from just anybody. Know your next door neighbor, not your cat. We know your cat is beautiful, but not. Ask from somebody who's an expert,
Mm,
somebody who's a professional in that area. Let them lead you in the right direction.
true.
And with that, I just want to say thank you to everyone. I yield it back to you,
That
Moderator.
is definitely a perfect way to bring this conversation home, people. And I just I've done this with all these beautiful, 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 powerful champions. Taxes are not just about what we owe, people. Taxes are connected to how we earn. You heard that. How we save, how we build, how we invest, how we give, how we retire, and how we plan to even transfer this wealth. So it has been such a rich and necessary conversation, from part one even to part two of this conversation. Debola emphasized certain things about estate planning. And she said, you know what, we're still going to bring this on because it's very, very important. Don't be surprised when we bring on, conversations about taxes another time. We're gathering questions from members of the community. We're gathering questions and feedback from you. If there are certain areas we definitely think, needs to be addressed again, trust us, we're going to bring it on. So here is a big takeaway that I'm going to wrap up. The taxes can feel like a punishment when we're uninformed. You get it? When we don't know, when we're unprepared, when we're uninstructed, when we're unstructured, we're unorganized, then it feels like, oh my God, this is such a punishment. This is such a burden. Oh, Uncle Sam, oh my God, why this? Why me? But when we understand the system, which is exactly what this topic is about, guess what? Taxes can now start pointing us towards opportunities, incentives, as well as better financial decisions. So the goal is not so that we live just staying scared of taxes, but the goal is so that we can understand them. We can just not be looking forward to April 15th every year to file our taxes, right? So the is just for us to plan ahead. And we're having the conversation right now is July. July is it's just, about gone. We're already what in August. And so the goal is not just to complain about what is taken. The goal is to learn what the system rewards. What is system rewarding us as individuals, as business owners? And then it leads us to the part of maybe I actually need to start a business of my own. What am I doing right now that I can actually convert into income? What are those things that I know, knowledge that I know? And I think we had that conversation about a few topics back. I'm sure you know something that your grandmother, your grandfather taught you about, your parents already taught you about. Now you are an a SME in that area. How can you convert that into an income stream for yourself? So, to our listeners, don't wait until the next tax season. Start right now. Book an appointment, have a conversation. You've said all of this, I don't understand, but this is what I could learn. This is what my situation looks like right now. Let us help you, guide you on the right path. Ask the right questions. Demola said in some of our podcast episodes, the quality of your life is dependent on the quality of the questions you ask.
Yep.
Keep better records, people. Review your income. Review your benefit. Many of us don't know. We've sat down with a lot of clients. Again, no shaming anyone, but asking them questions, and it's like, I don't know. We need to start knowing. Oh, or my husband takes care of everything. No, auntie, you also need to be part of the conversation. Or some people say, my wife takes care of everything. No, uncle, both of you needs to work together. Review your retirement plan. Review your business. Review your estate plan. And when needed, seek professional guidance. And on this note, we are actually riding home dry. Until we come your way another time, it's our goal that you definitely bridge the gap while you build the wealth. And so thank you so much for joining us. And a special thank you again to my co-host. Until when next we come your way, keep learning, keep planning, keep building, and do it intentionally.
Yep. And
Love
don't
you
forget
all. Take
to
care.
subscribe, like, and share.
Exactly. Please do that as well. Subscribe, like, and share. Bye, everyone.
Take care. God bless.